Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. We have with us Shail Bhatnagar also on the show. This is a show where we'll help you understand the closing action on the D Street. Well, it's not looking good as of now as far as the markets are concerned. The Nifty is now down 316 points. It's also slipped below 24,850 odd levels that a while ago, remember Mr. Rudramurthy was saying is he's watching out for this level. In case this level breaks, then it could mean further downside for the markets. 1.2% lower for the Nifty, over a percent loss for the Nifty Bank as well. Sectorally, as we speak right now, all the sectors of the Nifty are down in trade, with the PSU banks losing the most, 3.5% lower in trade for this index. Oil and gas, mid caps, Nifty Bank, autos, infrastructure are down by over a percent as well. Very far and few between stocks that are still holding up, just a handful of them. Asian Paints, JSW Steel, Bajaj Finance, LTI Mindtree, Divis and Hero Motocorp. Rest all of the sectors or stocks of the Nifty are down in the red. SBI is losing the most at this point, 4% lower. Remember, there was a brokerage house with a sell rating on this one. HCL Tech, Tata Motors, NTPC, ITC and BPCL are also all dragging right now. Good afternoon to all our viewers and good afternoon, Shail.
Good afternoon, Sakshi, and a very warm welcome to all our viewers who've joined us on Market Today. There is an interesting theme that is running in the market. Remember, till Tuesday, about 3 sessions ago, we were celebrating the 14th consecutive day of gains. Today, the market has taken back a substantial part of that rally. In the 14 days that started from August 4th to the Tuesday that's gone past, the index added somewhere like 1200 points, and of that about 310 have been taken away with a very serious bout of profit booking. It's evident across the board. Sakshi's mentioned that all 19 indices that we track are in the red, and of course look at the advanced decline ratio. 574 shares are in the green compared with 1800 in the red. So the advanced decline ratio is 1:3 favoring bears. More importantly, look at how the market is on individual indices. Remember, mid-cap 100 hit a record high yesterday. Out of 100 shares in the index, only 17 are in the green, 83 are in the red. Similarly, on the small cap index, which was actually in the green in the morning, about 85 stocks are in the red out of 100, just 15 in the green. The ratio is almost similar on the NSE 500. However, where is the money going in? It's going into FMCG stocks, it is going into pharma stocks. These are pure defensive plays where you see the traction because of a good monsoon in FMCG. Hindustan Unilever, ITC are at record highs, and of course pharma. There is a blowout, Sakshi, that's happening on many pharma stocks. Forget the record highs, but let me tell you, stocks like Suven Pharma, the counters up 5.7% today. Needless to say, this is a record high. Very strong momentum coming into this counter. 4 plus 4, 8 consecutive days of very strong surge, and of course about 10 lakh 45,000 shares have been traded, which is roughly about 2x the 5-day average. Similarly, record highs on PPL Pharma, ditto record peak on Ajanta Pharma at 33.36, Sun, Concord Bio, Eris Life Sciences, and of course who can forget this very strong move that you are seeing in Markson's Pharma. So 5, 7, 10 stocks at record highs, 3-4 of them at fresh 52-week highs, and a very strong move coming into the pharma space. This is the broad thrust of the market. Nifty has broken below 21 EMA, and the bank Nifty down 767 points, 1.5%, has slipped below 54 EMA. So it's actually a decent bout of profit booking happening on Friday.
Absolutely. I think we're now joined by Nilesh Jain, who's joining us on the show as well as our expert of the last hour of trade today. He's from Centrum Broking. Warm welcome to you, Nilesh, and thank you so much for taking the time out. And he's overseeing the technicals and derivatives at the broking place. Thank you so much for taking the time out. But Nilesh, 300 points lower in trade, not looking good as of now. But is there any sign of recovery or a bounce back coming right after?
Good afternoon to you, Sakshi. Good afternoon, everyone. So, looking at today's development on the Nifty structure, I think there will be a follow-up selling because today Nifty has reached its important support zone of 25,000. And looking at the momentum indicators and oscillators, where we are getting a kind of a sell crossover, and even if we look at the RSI, we have witnessed a negative divergence as well. So overall, the structure is basically indicating that Nifty is heading towards 24,600 levels. So that's the 50-day moving average, which is likely to be tested. And historically, we have seen that has acted as a crucial support and resistance. So as of now, that will provide some sort of support. So from current level, we expect another 200 to 250 point downtick. Even if you look at the derivative data of the weekly expiring the coming week, we have started witnessing the unwinding of the position from 25,000 put strike as well. And the major pain point we saw throughout the August series was the Bank Nifty, and today as well, the Bank Nifty is in fact leading from the front. So we still have a kind of a negative structure for the Bank Nifty, and we expect a further downtick to continue towards 50,200. So another 400 to 500 point fall can be seen in the Bank Nifty as well. So it is better to stay away for the time being. We expect another round of selling to continue.
Let's look at another aspect of the market, Sakshi. What's really interesting is that today is also a day of reckoning for all foreign institutional investors who come for their clients into the Indian markets. Today is the last day to notify the final client if you are a foreign institutional investor in India directing overseas inflows onto Dalal Street, to identify who the final buyer or seller is in your own portfolio. Provided you have more than 25,000 crores worth of investments in Indian equities, or beyond a certain percentage you have in an individual stock or an individual group. That is the day today where you have to either follow up that documentation down to the last full stop, or automatically reduce your exposure to either below 25,000 crore rupees in India or below 50% of equity of an individual stock or an individual group. So one part of selling is probably because of that as well, because if you see the extent of the sell-off, it's pretty dramatic. 300 points on the Nifty, now 800 points on the Bank Nifty. Why is Bank Nifty suffering more than Nifty? Because private sector banks are favorite vehicles of foreign institutional investors, and probably they are trimming some position at that end. Let's get Nilesh into the conversation. Namaste Nilesh ji. Any favorites that you can pick in the mid-cap pharma space with his buzzing in gains?
Right. So one stock that has been in our radar since short-term time frame. So Marks and Pharma is one particular stock. So technically, this particular stock is looking strong, and constantly we are witnessing a high top and high bottom formation today as well. Although some amount of profit taking is happening from the high levels, but the major undertone looks positive. If at all it slips in the range of 258, 260, that could be a good entry point. Keep a stop loss below 250. And again, we can expect a rally to continue towards 280 to 300. So Marks and Pharma is one particular stock that is showing strength. And as far as large cap pharma names are concerned, I think Sun Pharma, if at all we see any dip towards 1800, that can also be bought for upside target of 1850 to 1870. Stop loss can be placed below 1780.
Okay, got it. But Nilesh, how are you looking at the sharp cuts that are coming in on the PSU banks, particularly on SBI as well? How would you advise retail investors to really look at this? Even in the previous series, this was the index that lost the most. Again, it's the second series in a row when you're actually seeing sharpest cuts coming in onto these previous outperformers. How are you advising one to really look at these pockets?
See, Sakshi, there are two aspects to look at it as far as Nifty PSU banks are concerned. So, in fact, if you look at State Bank of India, where we have seen a major crack today, and the short-term structure, no doubt, is looking on a weaker side. So, from trading point of view, I think it is better to avoid taking any contract at current level. We expect another round of selling in SBI to continue towards 775 to 770. And if somebody is looking from a portfolio point of view, I think it's a good time to add in the portfolio if it falls in the range of 750 to 770. So in multiple tranches, this particular stock can be accumulated, but the time frame should be little longer term time frame. Purely from a trading point of view, I think it's better to avoid, and we expect another follow-up move to continue on the lower side. In fact, all these PSU banks are looking slightly on a weaker side, be it SBI, Can Bank, BOB. In fact, these three specific banks where we expect some amount of weakness to continue.
Okay, got it. So that's as far as the PSU banks are concerned. And staying with the banks, how would you really look at the private sector banks then? The first four names that come to your mind right there. We had just started to see some light coming back, to ICICI Bank, to an HDFC Bank, IndusInd Bank as well. How would you look at these, leaders of private sector banks? Do you think they will be the first ones to bounce back once this correction is done?
There's no doubt about it because HDFC Bank has been in a consolidation zone since a long time, and this particular stock, in fact, it's underperformer. In fact, if you look at the broader market, so HDFC Bank, I think today as well, it has not fallen that much, and it's a good time to accumulate this particular stock. It has a major support at 1600, so ideally that should be the stop loss for the long position. And if at all we see any recovery, HDFC Bank may lead from the front, and even ICICI Bank, where we are witnessing some amount of downtick on the back of profit taking. So that particular stock is also looking positive from a pullback point of view. But on the other hand, if you look at the stocks like RBL Bank, IndusInd Bank, and even Axis Bank, so the structure out there is looking slightly on a negative side. So there's kind of a mixed trade we are getting within banking space. So till the time we don't get any clarity, it is better to wait for the signs of reversal, and let's not catch this particular falling knife.
2:43, ladies and gentlemen. The last 45-minute wheel of the market starts just before we enter the weekend, and without any doubt, this is a massive bout of profit booking which is happening in the last 17 minutes since we begun the show. There is yet another 100-point fall on the Nifty Bank, now at a kissing distance at 50,600. And of course, there is a triple century of losses when it comes to Nifty, down 1.2%. But is this a good time to look at stocks which are actually bucking the trend and have a very strong parentage when it comes to performance in the first quarter that has gone by, and of course a backing of institutional investors? I am referring to a strong move that is coming in on Zomato, 2% higher, and at this time about 1655 crores worth of shares have been traded, making it the fourth most active counter. Nilesh ji, what are your charts on Zomato telling you in this background of intense profit booking? Here is a stock in the green. What is your prognosis?
So this is the second consecutive days of gain for the Zomato, and a strong reversal signs are coming, and that too on the day where we are witnessing a kind of carnage in the Indian equity market. So Zomato is looking in fact strong, and if market stabilizes, then we might see Zomato moving towards 270, 280 or maybe it can touch 300 levels as well. So yes, structure looks positive. Recent decline has given a good retracement for this particular stock. 248 should be the stop loss for the long position, and one can ride this momentum till 280, 290.
Okay, let me mark some other outperformers and outliers as far as markets are concerned. Look at the sharp burst on Tata Tech. Remember, we are focusing on mid cap IT, and Tata Technologies is one of those stocks that from last November have more or less disappointed long term investors, but some support coming in from 980 1000 level. Medium term charts, Nileshji, of Tata Tech, what are they telling you?
Well, it's a buy. It was there in a buy recommendation list as well. So after a long time, for the first time, in fact, I would say after listing, the stock seems like sustaining well above its 200 exponential moving average. And looking at the kind of a base formation that we have seen in the range of 970 to 1050, I think it seems like it has bottomed out. And we can expect it to move towards 1200 to 1230 kind of levels on the upside. The recent swing low of 1050 that will act as a major support. Ideally, that should be the stop loss for the long. And if at all you see any dip towards 990 or maybe 1090, 1080, that can be used as a buying opportunity. And if somebody is already holding the long position, one can stay put for the upside target of 1180, 1200 in the near term and maybe till 1250.
Okay, got it. Let's get you to talk about some more stocks, but before that, India VIX is something that we need to keep an eye out on. 8% higher, viewers, at 15.3. Again, that sharp burst of volatility can be seen on the index. So look at it. It's the fear gauge, and definitely it's at the high point of the day right now. Gujarat Fluorochemicals is buzzing, something that Shell had highlighted yesterday. It's 7.5% higher in trade today. How are you looking at the chemical space as of now? Are you looking at any interesting names that could be still bought in these dips?
Right, Sakshi. So chemical space, we are very much positive, and we have seen good attraction today as well, in spite of the weakness we are witnessing. So one stock that is Lakshmi Chemical, this particular stock, after a long time, we have witnessed a strong reversal sign. So looks positive for 315, 320 from a short-term point of view, and from a medium-term point of view, I think it is likely to move towards 350 as well. So structure-wise, Lakshmi Chemical looks positive. Keep a stop loss below 290. And apart from that, PI Industries is another stock where we have seen good attraction today. And today it has hit a new record high as well. So yes, this particular stock is also looking positive, where we have witnessed a good build-up on the long side with a OI addition of more than 4%. And this can be bought with a stop loss below 4520 for upside target of 4750 to 4800.
Another stock that we should be keeping a keen eye out on is Godfrey Phillips. A very sharp move can be seen on this one, 9.5% higher. In fact, the company is now saying that they want to consider a 1:2 bonus issue this month. It says right ahead of the AGM, and the shares have shot up after this announcement as well. Remember, today is when the 87th annual general meeting will take place, and right ahead of it, we can actually see a board of meeting of directors is scheduled for Friday, that's 20th of September 2024, to consider and to recommend 1:2 bonus issue, and that has cheered the investors of Godfrey Phillips. The stock has shot up beyond 7,000 levels in trade today. Nilesh, could you look at the chart and tell us what's ahead?
Well, Sakshi, the stock has been in a secular uptrend, and today it has hit a new record high as well. On a daily time frame chart, it has given a flag and fold kind of pattern breakout as well, and also crossed a milestone figure of 7,000. So the structure looks positive, still at current level as well, and upside may extend towards 7,400 to 7,600 from a short to medium term point of view. But the support is coming slightly lower at 6,500. So at 9%, 10% kind of a spurt that we are witnessing today is not advisable to chase at high levels. Better wait for some meaningful correction to enter long position. And the undertone looks strong for further upward to continue towards 7,400 to 7,600.
While the stock price, of course, has surged dramatically, let's look at a couple of positives that we see as far as this particular stock is concerned. When you see how it surged, well, in the past 1 year, the stock has given a 2.3 times return as far as prices are concerned. It has, handsomely beaten the BSE FMCG index, which has appreciated only by 23%. Godfrey Phillips has appreciated by 236%. How about valuations? If you look at it, it's fairly evenly matched when you look at the peer median. The price earnings on Godfrey Phillips is 39.2 versus the peer median average of 38.8. Price to book for Godfrey Phillips is 7.6. The peer median is 6.7, and of course there is a fairly decent uptick when you look at the trailing 12-month EPS, which has risen 5.8% over the last 1 year. So this is something that you can keep in mind. Of course, because of the issue of bonus, you see this spark coming in, but overall this is a stock that has done phenomenally well. What else is buzzing? I think, Sakshi, we need to take a look at the bank Nifty. A 4-digit cut now, 1004, down 50,500 is now with the bears. This is almost 1.9, almost 2 percentage point cut. Nilesh ji, where do you see support coming in for Nifty Bank now? 5450 EMA has been conclusively broken.
See, in the past, in fact, if you look at last 3-4 months, Bank Nifty has constantly taken support at its 100-day moving average, which is currently placed at 50,200. So ideally, it should take a halt at 50,200. But just in case if it slips below the same, then the downtick may extend further towards its 200-day moving average, which is coming way lower at 48,500 mark. But the structure, no doubt, looks negative. Any pullback might get sold into, since the Bank Nifty has reached its 21 DMA as well today. So yes, any pullback is a kind of a sell on rise structure we are witnessing in the Bank Nifty spot levels. And on the lower side, 50,200 is what something that we might see on immediate basis.
Okay, got it. Let's get you to again talk about some of the other pockets as well. Since you've been talking about the bank and the finance space, I will also ask you to tell us about the entire broking houses, capital markets related space as well, which was bouncing up until yesterday and this morning as well. We've seen so many of these stocks really rally in high single digits of late. Edelweiss, Geojit, Financial Services, IIFL Securities, CDSL, BSE, 361 WAM, the number of stocks are too many right here. How are you looking at this space? Do you think these current dips that we are seeing could be actually great opportunities to buy?
Well, it's actually purely on a technical front. If you look at the structure of Edelweiss, this particular stock, where we have seen a good breakout coming in, and the support is placed at 110, and I think if at all it falls below 115, that could be a good opportunity to go long. And on the upside, it seems like it is heading towards 135 to 140 kind of levels. So keep a stop loss below 110, and this particular stock can be bought. Apart from that, IIFL Securities, I think today it is forming a kind of a bearish engulfing candlestick formation, which means that we might see a follow-up selling to continue towards 300. But the major structure from a positional point of view is slightly on a positive side. So 260 should be the stop loss for the long, and if it falls below or in the range of 280 to 300, that can be this particular stock can be bought in that particular range.
Okay, got it. So that's as far as the broking houses spaces are concerned. Another segment within the NBFC space, the insurance basket particularly. How would you look at some such stocks? Today again, I think ICICI Lombard is still holding up into the green. Anything that looks promising right here?
See, ICICI General Insurance, ICICI GI, so this particular stock has a very strong chart pattern, and it has hit a new record high as well. So it is in the uncharted territory right now, and the structure is basically hinting that the further up move may extend towards 2500. But in this week, it is already up close to 6%, and this has been almost 12 to 13 consecutive weeks of gain we are witnessing in this particular stock. So yes, this particular stock can be bought on declines, keeping stop loss below 2200 and 2350, 2500 kind of levels we might see in this particular stock. Apart from that, rest of the insurance stocks are likely to witness further profit booking to continue.
Fair. We've had a massive run up, and Sakshi and I were often at a loss trying to explain why markets are rising for 14 consecutive sessions. But now you see a decent bout of profit booking. It's good because it allows existing investors to book the money into their bank, and of course, it provides an opportunity for newer players to come in. Remember, on the days of corrections, we are a little worried because we don't know when the corrections, how long will the corrections last. But typically what happens is that after a day or so of consistent selling and a sharp fall, you see fresh money coming into it, as we've often talked about over the last so many months, that there is so much of money waiting on the sides that it takes all these opportunities with open hands. Let us now start focusing on volume buzzers, which are stocks where super high volumes have been seen and it's accompanied by a surge in price. I'll request Nilesh to comment on SBI cards, 800 rupees for you. Now this is on a very strong volume of 1.5 crore shares, and the counters up 4%. What are the charts telling you, sir, on SBI card?
So the charts are very strong. Reason being, today we have seen good volume action, price and volume breakout. Not only that, even if you look at the derivative data, 8% fresh OI addition can be seen in this particular stock. So yes, we are still bullish for further up move to continue towards 850, 870. But a similar strategy should be deployed here, like buy on decline. At current level, it can be bought, but one should have some capacity to buy at the lower levels as well, because the support is coming somewhere around 760. So any dip is a good buying opportunity. The target price comes around 840, 860. The structure looks strong.
There are specific reasons why I am marking such stocks, because they are well off their all-time highs. 857 in particular is for SBI, and they are showing a very strong traction on the long side at a time when the broader markets are correcting. Similarly is the action that you need to watch on Credit Access Grameen. This has been one of a few stocks that have actually slipped fairly sharply when you look at from the point of view of the all-time high, which was around 1700, but decent volume today. What do you think is happening on the charts, Dileshji, especially on the weekly chart and the quarterly chart? Almost 9 months of consistent selling. Is the worst over?
So you are talking about Credit Access, which is trading at 1200 rupees. I think looking at the overall setup, the stock was in a downtrend, and I think it is still in a downtrend. But the only support that I can see in this particular stock, which is placed at 1150. So a kind of a double bottom can be seen, provided if it respect and defend to 1150 levels on the lower side. And this is merely, it seems like this is merely a pullback, and the negative formation is still very much intact till the time it doesn't take out 1250 level on the upside. So after taking out 1250, the bearish formation will be negated, and post then we might see strong pullback to continue towards 1300. But yes, if somebody already have a long position, then keep a stop loss below 1150 and stay put.
Okay, got it. All right, I'll bring up again Vodafone Idea for all our viewers. We've been tracking the stock right from morning, from the time the brokerage house report from Goldman Sachs came in. That's expected an 83% drop in the stock. The stock is still down by about 11.64% at 13.3. There are a lot of investors and traders who are a worried lot right there. Nilesh, like you have been there, I anchor the daily calls show, and at least 15 calls or 15 questions at least came in today on Vodafone Idea particularly. So we can look at the kind of concern that there is. The stock had become a trader's favorite just a few months ago, and the concerns now emerging have put those investors into a stuck zone right now. What would you advise?
Absolutely, Sakshi. So we have already seen good momentum in this particular stock, but in the recent development that we saw on a negative side, the stock slipped below its 200-day exponential moving average today, and with a good volume participation as well. So the structure is basically hinting that we might see a follow-up selling, and the next major support for this particular stock, which is placed at 12, which is a kind of a triple bottom that we saw earlier in the month of June and July. So yes, 12 should be the stop loss for the long position, and we may see some kind of a pullback in this particular stock. And on the upside, the immediate hurdle is placed at 14.4.
Okay, well, on that note, thank you so much, Nilesh, for being with us on the show and sharing all those insights with all our viewers. Appreciate your time with us, as is always. And thank you so much for being with us. Wishing you a very happy Ganesh Chaturthi, and greetings for the season going forward from here. We will be having you back very soon to guide all our viewers in the markets going forward as well. Thank you.
Thank you, Sakshi, and wish you the same.
Thank you. All right, viewers, and now it's time to also welcome Aditya Arora, the founder of Analytics Stock Market Research, on the show with us. Aditya, welcome. Good afternoon. Good to have you with us. Tell us, what are you reading into the current setup in the markets, the fall right there? Where do you see supports coming in for the Nifty, and do you see a further downside?
Very good afternoon to you and to everyone. Thank you for having me on the show. So market texture looks little bad right now because small caps and mid caps are actually giving up. So this pocket had been living in a froth, or were quite overextended technically also. So that is actually putting a lot of pressure, and reliance also is taking the index down. So I think it's a weak market, but one shouldn't wait for support to get in. Let the market settle down. I think tomorrow also market can slide down little bit. We are seeing Japanese market also down today 2.5%. So it's a mix of global and local. And important thing is that since last few days FIs hadn't unbound their long position, but yesterday they have started unbinding their position. So I think this fall shouldn't be taken lightly, because this can further exaggerate from here.
Okay, ladies and gentlemen, we now have 27 minutes left for not only today's trade to close, but also for a very, very volatile week to come to an end. Let's look at the broader market incidence that is happening as far as prices are concerned. There are some interesting stocks I'll mark for your attention, which you can read for the weekend. There is a breakdown on IDBI Bank. 4.5% lower, 88 rupees 30 paisa, and it's accompanied by a fairly sharp rise in volume. So it's a price and volume breakdown. This is an interesting development. Ditto Vodafone, you have a price cut, although to not that extent, happening on Indus Stars. 4.5% lower, 422. Remember, I generally don't stick my neck out on recommending a particular stock, but one exception has been Indus Stars ever since its block deal happened at 320, 330 rupees. For the moment, it may be providing you an opportunity to look at it. Erstwhile trader favorite BHEL, 3.5% lower, 264.55, and you have consistent selling coming on Container Corporation of India, down 1.8%, 942. Similar sell-offs are being seen across banks, which we've marked in the morning, but some kind of a slide which is across border markets and broader sectors is what I need to mark. Even Tata Elxsi, I remember about 1 week ago there was this celebration in the market that a very sharp move had come in, and perhaps the worst was behind Tata Elxsi. Well, that and a little bit more has been taken back by the market, 1.7% lower at 75.95, although volumes are very, very low. Sakshi.
Okay, let's also now welcome another guest on the board to join in the panel. We are now joined by market veteran Mr. Arun Kejriwal on the show with us. Warm welcome to you, sir. Good to have you with us. We are welcoming you in a completely different market setup. The last time we spoke to you, the markets were buoyant. We've now seen a 14-day record-breaking stretch in the markets, and last 2 or 3 days, we've again seen the markets momentum weaken. Today especially, it's been a bigger drop right there. Do you see fatigue setting into the markets after the run-up that we've already seen, Mr. Kejriwal? And could this be the beginning of a deeper correction, looking at what could be ahead going forward? We're enveloped with a lot of global events. Mr. Kejriwal, could you hear me? Okay. Mr. Kejriwal, could you hear me?
Yeah, I can hear you.
Okay, good afternoon and good to have you with us. The question that I put across to you, sir, was as how are you looking at this sharp dip in the markets today? Could this be a beginning of a deeper correction? There's a big underlying fear among investors in the markets after the record-breaking stretch of 14 days that we saw in the markets that now is the time for a deeper or a longer correction that we could be seeing.
Absolutely, you've hit the nail on the head. I won't be surprised if you have some sort of a knee-jerk reaction upward on Monday, and then the correction continues. But let's understand, it's not just 14 days that you saw the record-breaking highs, but if you look at it during this week, Thursday was weak, Wednesday was weak, Tuesday we were at best flat. So the signs of a correction were available right at the beginning of this week. And this rally has extended for close to, if I could say so, about 10, 11 months. So it's high time we had a correction. And when corrections happen after such a long time, they tend to run deep.
Right. Namaste, Arunji. Greetings on impending Ganesh Chaturthi. I hope Ganeshji is as, how should I say, kind on all of us as he has been over the last so many years as far as markets are concerned, and that despite this dip, we may continue to make very serious money in the days ahead. Now, this is also a time for deployment of cash, even if it is piecemeal. You've always been a stock hunter. Anything that is on your radar where you feel that prices have corrected well, but there still might be some time to go. So any names that you can share which are on your radar?
So before I share, let me share something about Ganeshji. I happen to live near the beach, and starting tomorrow, for the next 9-11 days,
Yes.
I will have Lord Ganpati showering all his blessings on me, because Chota Bada Milakar, nothing less than 1,000 Ganpatis would be passing my house before they are immersed. Coming to your question, let me give you an idea. We have an IPO opening on Monday, which is coming from the house of Bajaj, and they are tapping the markets after 3 decades. It's hell of a long time for a group as big as them. So when you look at Bajaj Housing and the business they are in, the first share that comes to mind is PNB Housing. And along with PNB Housing, its younger brother, smaller brother, Aadhar Housing. I believe these companies offer you immense value. Looking at the valuation at which PNB, I beg your pardon, at which Bajaj Housing is concerned, and this entire sector would get a lot of news flow and activity and become active once the issue gets listed, probably next Monday, that is on the 16th.
Okay. How about Bajaj Housing itself? Would you be putting in money there?
Well, it's like this. It's the offer is tempting considering the fact that there is a premium which is close to 75% of the issue price. So you put your odds, you expect some allotment, and you have an exit route at such a high premium. So it makes sense to apply and push your luck that you get allotted. But having said that, I am sure with the kind of valuations at which they are hitting the market, the entire sector would get revitalized. And that is why I believe the other shares that are recommended give you an opportunity to make money in the short and medium term along with Bajaj Housing.
Okay, got it. So we will be definitely looking at it. Would you also have a view on Premier Energy, sir? This stock that got listed at 120% premium just 2 days ago, and has been again on an up move since yesterday. Yesterday it went up 20%, today another 10% in this weakening market after a 215 crore rupee order, Premier Energies.
So I have a view, but I'm sure the view will not be the best that readers or viewers would like to hear from me. So let's understand the issue came with numbers for the full year ended March 24, and they also gave numbers for the first quarter, uh, June 24. Now, the numbers for the quarter June 24 were significantly higher than what the company reported for the full year, simply because new capacity came on stream between December and March 24, which saw the reflection of higher earnings in the first quarter. If you were to annualize that first quarter, you have a P multiple which look reasonable until a couple of days back. With the sharp price move that you have seen in the 2 days, the share has suddenly become expensive. And you must keep in mind that this issue was priced at 450. At 450, you also knew the new capacity that did get commissioned when the company went public. The good thing about this company is they have large capacities. They are putting up new capacities from their own money plus from the IPO proceeds. But we also need to understand the two big daddies in the space, that is the Ambanis and the Adanis, have also in the meanwhile added very large capacities, of course, in companies which are not listed. That doesn't mean the space has a supply demand mismatch and you can charge what you want. So it's a highly competitive industry with plenty of capacity coming on stream, looking at the demand that we have. To cut it short in one line, I believe there is nothing left on the table at today's price, and people who are now investing in this could be in for medium term surprises on the negative side.
Okay, got it. Let's also get in, Aditya on the board as well, and I'll ask him on a little bit of the spaces which are actually buzzing right now. SBI cards is something that I wanted to point out to you, and the stock is actually the top performer in the FNO space right now. Would you have a view here on the charts as to where is the stock really headed? And 4% high entry at 800. What do the charts suggest right now?
I think they look absolutely fantastic on charts. After a long time, SBI cards has started outperforming, and it's also breaking out of a downward trending trend line. So that's a very positive sign. And I think a long period of outperformance has started. So I maintain my positive bias on this counter. Even if the stock corrects because of poor market sentiments, this would be a good accumulation opportunity.
Arunji, this is on the pharma space, and one of the most significantly important performances that have come in the market over the last 2 months or so has been the strike back that the pharma empire has given to the Wall Street. All old world stocks are at record highs, starting with MNCs such as Glaxo, local giants such as Sun, Cipla, Reddy's, Dr. Divi's, and what say of the mid cap and small cap pharma space? Is this a hunting ground left for some decent gains even now, or have we had enough? Is there a favorite that you have amongst the drugs business?
So when you say drugs, I get a little scared. So let's use the word pharma. It's a more comfortable word. The word drugs, with all the serials and all the Netflix and Amazon Prime that you see, is a little scary. Leaving jokes aside, Shell, let's understand what happened in the last 3-4 years, because people should be aware of what's happening. So post-COVID, pharma was the big boy on the street. Every pharma company, irrespective of what it was manufacturing, was having all its fingers in money, money, and money. The moment COVID sort of receded, come 22, you found pharma taking a backseat. Companies reported poor performances, and the whole pharma just sort of, to some extent, dissipated in front of you. Pharma is pharma. You need medicines. Long life is today the order of the day. So there is no way that you can be off medicine. Some amount of medicines that keeps you going and extends your life is the order of the day. So it's come back with a vengeance. And like you mentioned, the big, the small, the mid cap, small cap, everybody seems to be making money all over again. Is there value? Yes. Because somehow or the other, the retail pack, the momentum pack on the market has not yet joined the bandwagon. They are still stuck with defense, PSU, power, railway, and to some extent banking. So we need to see some sort of sharp unwinding there and people moving into, say, pharma and some other sectors before you can say that the value part of pharma is over. So I think pharma is good for the next 5 to 6 months minimum, because that's the time I expect it would take for people to exit from there and move here.
Okay.
So if
Any
you were to
favorites
ask me,
on the table so far?
yes. So if you were to ask me where should I put my money, I believe it's safest when the movement is just starting to put money in the large caps. So typically a Reddy, a Sun Pharma, a Lupin is where you should put your money, because things always pick up with this because they have size and scale. And then you have some new listed players. So you have a MCure which has listed recently. You have a Mankind which has listed maybe a year and a half or 2 years ago, but it hasn't moved beyond 1975 and 2150. So it's been a very narrow range. When a breakout will happen is a little difficult to predict, but when it does, you could get a 15-20% upside in next to no time.
Okay, fair enough. Let's also ask Aditya if there is anything within the pharma space that looks interesting on the charts even now.
I think Sun Pharma is consolidating. If we see a breakout above 1850, that would be a good buy with stop loss of 1800, and target would be 1900 to 1950.
Okay, got it. Sun Pharma is looking positive on the charts. Mr. Kejriwal, I'll come back to you. Another defensive space, FMCG, is something that I wanted to draw your attention to, especially stock like HUL that did nothing for the last 4 years and is now at a record high level, gradually moving up from 2200 levels to all the way up to 2838 as we look at today. How are you looking at the FMCG story unfold, and some of these underperformers, is it the time for them to now start rallying in and performing in this next leg?
Absolutely, the
ma'am,
time.
Aditya, this is for Arun.
Okay, sorry.
So, ma'am, with your permission, if I could use a simile, when the elephant starts moving and it's the elephant's turn from tomorrow with Ganpati coming, you can be sure there is a lot of movement that's going to happen. Elephants are slow movers, but when they move, their pace is so large that they can overtake the cheetah, the tiger, the lion in 2 steps or 2 paces. So it's the movement that you're seeing in lever after that consolidation of 4.5 years is going to be sharp, swift, and it can do wonders for the indices simply because their weightage is large. So watch out for this pack. Elephants don't move every day. And when you were talking about pharma,
the change.
just a minute,
Yes, sir.
just a minute, Shell. When you were talking about pharma, one stock that I had recommended on your channel maybe a month ago in the mid cap, small cap space was Innova CapTab. That share has hit a 52-week or a lifetime high. It's about 2.5 years old since being listing. I believe this is a stock which should be on anyone's radar. It has got a lot of good things coming, and when it declares its results for the September quarter, it would by then have launched its new facility in J&K. And incidentally, J&K has a new scheme for companies coming up there, where there are a lot of incentives to bring about industrialization in Jammu and Kashmir.
Wonderful. Yes, I remember Innova CapTab. Let me just check the price. I think sir had talked about it at 350 or something. Am I wrong?
450, 450,
yes, this was now at 752. Yes, so now at 752, and that's the reason, ladies and gentlemen, that we get Arunji as frequently as we can. I hope he comes every day, but people who are super wealthy try to enjoy their wealth rather than sort of come regularly. But for whatever little time that we get Mr. Kejriwal, it's a blessing to have him. And of course, Unilever, after 4 years of just doing nothing, here is a stock that very quietly hits a record high on a day when the markets are correcting substantially, and it hits a record high after ITC has hit a record high, as also Colgate. So these are old world companies with when Arunji used to trade and invest regularly, we used to listen about. So many of the companies that brands still exist but have been purchased by Hindustan Unilever. There's Brooke Bond, there is Ponds, there is Lakme, Tata Mills. Sakshi, you would be surprised to know Tata's used to make soaps, so that was also purchased by Hindustan Unilever. So that decade between 1990s and 2000 was the decade of Hindustan Unilever. Stock went up from 300 to 3000, and from 3000 after a 10:1 stock split, it did nothing for 15 years. Then again woke up somewhere in 2006 when the parent said, you guys have no idea about the valuations that Hindustan Unilever has, and from then on it was a great story. So that's the background of Hindustan Unilever, ladies and gentlemen. 324. Arunji, now we are in the second half of calendar 2024. Traditionally we have seen H2 being better than H1, and we are also at the cusp of a rate cut on Wall Street, which might translate 3 months later on the Lal Street as well. How do you think sensible investors should position cash flows into the market? Which segment?
So I am from the old school of thought. Two reasons why I say that: one, my age; second, thinking doesn't change overnight. So, keeping that in mind, I don't want to get compartmentalized into talking of sector specific and saying that this is where you should put your money. I believe evolving with time, two new sectors have come up. One is the IPO segment by itself, because this is a new basket of stocks, and you can have a stock from the IPO segment, say, for the first 12 months of listing. It's a very interesting period. It's a new baby, a new kid on the block, and you get a lot of opportunities to make money. I can list out maybe 10, 15, 20 stocks at one time, which did nothing when they listed. And within 6 months, suddenly people got up and took note of it. So that is one segment. Second segment is 12 to 18 months, IPOs come and go and people forget about these stocks. This is another time where you can do deep dive and pick out some of the stocks which are going to become the front runners for the next 5 years or 7 years. So I spend a lot of time looking at these two segments of companies, and I do get an opportunity to make money and make decent money considering the opportunity, because people have a very short life and memory of these newly listed companies. If they have made money on listing and they have got out, they couldn't care less what happens to that stock thereafter. If they've lost money, they sort of cross out that stock. I will buy any share, but not this share. So these are the opportunities that I get. So I believe your money should be allocated to these two types of stocks. IPOs offer an opportunity to make money, but you need to have the blessings of not just one god, but many more gods, because allotment is almost impossible. So yes, there is plenty of opportunity to make money. It is just that you need to spend some time, some homework before you pick and choose stuff.
Right. Arunji, just for this particular reason, in Delhi there is this Bengali Baba who confirms allotment in IPOs. And I think it's been a decade since we've seen you in Delhi. This would be the right time to come and visit. We'll do a great food tour and I'll get you to meet Bengali Baba also.
So if your offer is that if after meeting Bengali Baba I'll get allotment, I'm willing to come. And if I don't get allotment, I'll talk about it, that even after Shell introduced me to Bengali Baba, I have not got allotment. So either way, I'm willing to take you on.
That's
आपका
wonderful.
स्वागत है.
Okay. Well, 2 minutes to go for the markets to shut shop. We are about 277 points lower in trade at 24,868. Let's get Aditya to say, we've seen some pull from the day's low point, Aditya. Is it a sign that the markets maybe now looking at a bounce back next week? What would you ask investors? How should one be prepared?
Actually, one shouldn't try to take this adventure because after a long time, we have seen a cut of 330 points. So early morning on Monday, it could be a surprise for the bulls. Market can bounce back, no doubt in that. But as per the technicals, it's a risky trade right now to go long.
Okay, got it. Just 1 more minute to go. Arunji, how would you advise the viewers and investors at large now to continue to protect their capital and at the same time, enjoy the rest of the period that is there for the calendar year and for the fiscal year as well?
So, ma'am, you're asking me to do a very, very difficult thing. So, to tell people that you've got tough times ahead, you need to take some money off the table, which I have been saying for the last 3 to 4 weeks. It's better to not make that last rupee or that last 100 rupees. Take some money off, you will get bigger and better opportunities. Is very, very tough. even tougher for people to accept it. So now to ask people that, okay, you are making losses, now sell in a loss is tough. But having said that, the fact of the matter remains that all good news is discounted. Everything is there for you. The June quarter results were not exciting. They left a lot to be desired. Can June change dramatically when September results come? Uh, yes, optimism is what the market relies on, but I don't believe we have that kind of a turnaround coming in this particular quarter either. So with the ninth quarter being bad, and if the 10th quarter is also bad, somewhere people will lose faith, will lose some confidence. The second part is that we've had a stupendous rally. You need to pause, correct, take stock of the situation before you move on. And we've had a good monsoon, and we should be grateful for that. I don't think on the economic front or the political front we have much to worry about, but corporate India seems to be lagging behind, and you can't do much about that.
Okay, got it. That's a wonderful take right there. Thank you so much, Arunji, for being with us on this very special edition, and with those pearls of wisdom, always enlightening our viewers right there to follow just the right strategy in any sort of a scenario and any volatility that we've been seeing all across this entire year with you with us on Business Today television on several shows. And thank you so much, Aditya, as well, for being with us on the show and preparing traders to do the right thing as well going forward, and cautioning them at the right stage. Well, with that, we wish you both very happy Ganesh Chaturthi and season's greetings for what may follow going forward, and hope you all have a fantastic 1 year ahead with blessings of Ganpati Bappa pouring both on your professional and personal lives as well. Thank you so much. It's been a pleasure to host you both.
Thank you. Wish you the same.
Thank you. And with that, viewers, we wrap up this special edition, 4,852. That's a 292 point of a downtick on the Nifty, almost 1.1% lower, and the Nifty Bank about 600 points lower in trade. We'll wrap it up at that. There are some days which are not very good, but we'll hope to see this journey going forward. So stay tuned. There's a lot more coming up on your screens, even beyond the stock market hours, and hope you have a fantastic weekend ahead, and happy Ganesh Chaturthi to all of you.
You're joining us on Business Today Television on India Today Group, and with me here is Mr. Bhupen Wakankar, Director Global Trade at Amazon India. Bhupen, thank you so much for joining us on. Yes. I'm going to start off by asking you, tell me what have been the latest trends like with the Exports Digest, and what